The legal protection of property rights is an indispensable component of economic development. My name is David Ansara of the Center for Risk Analysis, and joining me today to discuss the importance of property rights is Alexander Hammond, who is a policy advisor at the Institute of Economic Affairs in the UK, as well as a senior fellow at African Liberty in the United States. Alexander, welcome to the CRA channel.
Thank you for having me, David.
So now, Alexander, you've been doing quite a lot of extensive research into the importance of property rights. You've been looking very closely at South Africa. What, in your mind, is the importance of private property rights in terms of economic development and social development more broadly?
Yeah, so property rights are very, very important to development for a number of reasons. There are many different kind of ingredients, if you want to say, that go into a recipe for economic growth. Some of these are freedom to trade internationally, lower, less burdensome regulation, sound money, the size of the government. We don't want the government to be too encompassing, especially in the marketplace. But a lot of these ingredients are actually based on protection of private property. So if we look at free trade, for example, a lot of classical liberals and free traders say it's extremely important to boosting the economy and lifting people, billions of people out of poverty. And while that is true, without property rights underpinning free trade, as an example, citizens kind of lack the uncertainty that the fruits of their labor will be protected, meaning the incentive to invest in anything, to produce, to innovate, doesn't really exist. Why would you want to produce something if you don't know that you're going to own what comes of it, and you wouldn't take the risk in the first place? And there's other things such as inflation and sound money. We need a stable currency in order to prosper and also to trade, and so prices don't get out of control. And if you don't have property rights, it then means there's less investment into your country, because what I said previously about no one wanting to invest if their property isn't protected. So there's less investment, and as a consequence, the currency is then depreciated, inflation then increases, and as we all know in Zimbabwe in the mid-2000s, if you kind of couple that with more money printing, different measures of quantitative easing, the results can be absolutely dreadful. And other things, government size, if you've got no private property rights and the government owns all of the property in a given country, that obviously means your government is enormous and wouldn't be very effective in doing much. And also, if you don't have protection of private property, things like banks and finance and financial sector are also really badly hit, because a lot of people use their property or land titles as collateral and debts. So you've got all these ingredients to economic growth, but the basis of them, in my view, is the protection of private property rights.
So Alexander, you recently wrote an opinion piece in South Africa's City Press newspaper, where you outlined the very close relationship between secure property rights and higher levels of economic growth and prosperity in society. Could you explain that argument in a bit more detail?
Yeah, so what I found is I looked at the Fraser Institute's Economic Freedom of the World report, and I won't go into the report too much because I know you had a great interview with Leon Lowe from Free Market Foundation just a couple of weeks back, and he went into it in much greater detail than I could. But what I did is I took the protection of private property rights data, which is one of the 42 different indices that make up the report. And what I found is in South Africa, in 2018, because it's a 2020 report and the data is 2 years old, just because it takes a while to sort through the World Bank, IMF, UN data. And what they found is that South Africa ranked 82nd in the world for protection of private property rights, which is a huge fall. 5 years earlier, in 2013, the nation was 14th place. That's quite respectable. And this data goes all the way back to 1970, and it was at its highest in 2013, but now has fallen massively. And just to put that in perspective, that is now means South Africa has weaker property rights than Brazil, Iraq, and only slightly 0.001, because it's ranked on a 0 to 10 basis, only slightly better than Russia and Egypt. So South Africa's property rights have fallen a lot. And in that 5-year period, South Africa's GDP per capita fell by almost 7%. And when I look at the overall, all the countries in the world in the report, which is 161 different nations, of course, some nations like North Korea, it's basically impossible to get reliable data from. So they look at 161 nations. And what I did is I split them into deciles based on their level of protection of property rights. So decile 1 is the 16 or so countries with the highest property rights, the strongest property rights. And then decile 10 is the weakest. And then all the nations will be in their respective deciles. And what I found is the strongest decile, so decile number 1, has a GDP per capita of $60,000. And that is huge, because when you compare to the weakest decile, they only have incomes of $1,800. So the difference between that is the strongest deciles, those countries with the strongest property rights, have GDPs per capita of almost 3,100% higher than the weakest. And that's kind of what I found in my studies and my report. And yeah, private property rights are crucially important to economic wealth.
So Alexander, that's a remarkable correlation. Can we look more closely at South Africa? And there are moves afoot to amend Section 25 of the Constitution, which guarantees private property rights in the event of expropriation. The expropriation without compensation debate rages on. What are some of the risks associated with EWC, and particularly looking at the historical precedents from other countries that have experimented with expropriation in the manner that is being proposed here in South Africa?
So some of the risks are, well, if we look at it, Ramaphosa, when he was talking about it a couple of years ago, he suggested expropriation without compensation would turn South Africa into the Garden of Eden, he said. But unfortunately, I don't think that's going to be quite the case. In 2018, so long before the most recent rhetoric around land expropriation and before the amendment's been changed in any way, the World Bank actually found that South Africa's weakened property rights, and honestly just the harsh rhetoric around property rights, had already led to an increased capital flight out of the country and increased corruption and social fragility. And at the same time as this report was out, the Banking Association of South Africa found that just the possibility of expropriation without compensation has already led to investment falling, FDI, foreign direct investment in the country, falling, and a reduced ability of banks to extend credit because they rely on strong property rights in order to give loans to people, for entrepreneurs, for either development or just to improve their own living standards. So that's what has happened before. And South Africa's economy is in a good way already. So if less investment starts coming through, things like the unemployment rate, which is already about 30%, up to 70% now for youth because of COVID, but it was 50 before that. So extremely high, and this will just do nothing but harm it. But if we look back at the past, unfortunately, with expropriation without compensation, the results are almost always the same. There's always tends to be food shortages, hunger, migration, and often a lot of deaths. If we look north to Zimbabwe, not Botswana, Zimbabwe, and in the early 2000s, we saw Mugabe take some 23 million acres of land. And the results of that were catastrophic. A lot of the farmers, which had in-depth knowledge about commercial agriculture, left to Zambia, Nigeria, Ghana, across Africa and the world. And what the country that was then known as the breadbasket of Africa, food production fell by upwards of 60%. Within 1 year, from 2000 to 2001, the value of land fell by 75%. By 2008, inflation was roughly about 98% every day. which is enormous and much, much higher than the Zimbabwean government reported. That means prices doubled every single day. And FDI, so the investment I was talking about before, fell from almost $500 million in 1998 to less than 4 million in 2003. And that was just in Zimbabwe. We can look across history and it happens continuously, whether it be Kazakhstan in the 1920s, when Russian forces expropriated grain and livestock in the late 20s. By 1931, livestock numbers were down by about 90%, which is enormous. About 1.5 million people died. In Ukraine in the 1930s, about 4 million people died, mass food shortages. We know about China and under Mao and what historians call the greatest demolition of property in human history, which resulted in about 40 million deaths. And now I'm not saying that South Africa is going to have these millions and millions and millions of people dying at all. I'm not saying that. But when we look across the last 100 or so years and even further, the results are always the same. There are food shortages, less investment, and it follows a similar path. And I'm worried that South Africa might be going down that path, especially if the constitution is changed to change for just an equitable clause for expropriation to potentially mean nil compensation for property taken by the state.
Well, thank you very much, Alexander, for sharing your insights with us. I think there are a lot of proposals on the table around the post-COVID-19 recovery, but a completely cost-free proposal, which we would endorse, would be to say, give an unequivocal guarantee that property rights will be respected in South Africa. I think that will go a long way to kickstarting growth in the recovery phase. But Alex, thanks very much for your time today, and we certainly hope to have you back on the CRA channel in future.
Thanks for having me, David.